Today we're going to be talking about how rate increases affect your monthly payment. Now, if you already have a mortgage and it's a 30-year fixed mortgage, your payment is not going to go up. So I want to be really clear on that, because sometimes people go, wait, what? Is this going to affect the mortgage I already have? No, not if it's a fixed rate mortgage. If you're in an adjustable rate mortgage or you have a HELOC, you may want to take a peek at those to see what's going to happen. Okay, but for everyone else, this is for my buyers, people who are thinking of refinancing. When I started seeing rates go up, I was like, okay, we need to see how this is going to affect affordability for everyone. Because what I hear a lot of is, oh, I'll never afford anything then. And I'm like, dude, it's $28, like you're okay. Like, here's the thing. So basically for every 0.25% the rate goes up, on $100,000, it's $14 a month. Okay, maybe write that down. So for every $100,000, for a 0.25% increase, it's $14. So let me just give you some examples, and I wrote them out. I'm just going to read them to you. If you have a pen and a piece of paper, write them down because it will make you feel better. Okay, so you're buying a $200,000 house. The rate is 3.25. Your principal and interest, so not taxes and insurance, guys, just principal and interest, is $870. Okay, rate goes up to 3.5 because you haven't found the house yet. You still want to buy a $200,000 house. Okay, $200,000, 3.5%. Payment goes up to $898, $28 difference. Okay. $500,000. So $500,000, 3.25% interest. You know, your principal and interest is $2176. And if we take you all the way up to 3.5 at that $500K, you're now at $2245 for a $69 difference per month. Okay, let's go up to $1 million. $1 million at 3.25, your principal and interest is $4352, and at 3.5, it's $4490. $138 difference. Okay, so here's the thing: if that difference, okay, let's just talk about the $200,000 loan. If that increase of $28 makes it so you no longer qualify, you were max qualified, which is what we never want to do. Okay, and I've talked about this in other videos. Max qualifying is the path to being house poor. So generally, when I'm qualifying a borrower, I'm going to be trying to keep you below your max as much as I can. So, you know, there is a delicate balance between how much you have to spend to get a house in the market that you're looking, as well as keeping your debt to income as low as possible. Okay, so, you know, so if someone, especially at the $1 million category, if $138 makes it so you can't afford that house, you shouldn't be buying that house. I actually feel that strongly at all of these categories, but at $1 million, it's like, I mean, come on, guys, like $138 and you can't buy the house now, like you were being max qualified. So the key here is that, look, if you go from 3.25 to 3.5 and it's a $200,000 of loan, is it hundreds of dollars a month? No, it's $28 a month, okay, for that quarter at $200,000. Now, over the lifetime of the loan, does it cost more? Yes, it does. Higher interest rates means it will cost more over the life of the loan. Most people do not keep their loan for 30 years. I know. You would think they do, they don't. The average is like 3 to 7 years. Okay? So I think it's important to not get dismayed by rates moving up. We've had a great time, haven't we? We've had such a nice time in low rate land. I've enjoyed it. You've enjoyed it. I wish it would last forever. But here's the problem. Rates going up are a sign the economy's improving, which is a good thing. It's also the only way we're going to get inflation in check. If rates stay low forever, it's a sign that the economy is not doing well. And we don't want that, because what happens when rates are incredibly low is, like, think about our retired folks or people who, you know, have savings. They're getting paid nothing on that money, guys. Nothing. So the bottom line is it natural when the economy is improving for rates to go up? Yes. Is a rate at 3.25, 3.5 the end of the world? No. No, I mean, years ago, like maybe 4 years ago, I remember when I refinanced my house into a 30-year at 3.3, okay? And everyone thought I was a genius. They wanted to know how I did it, what program, you know, when did I lock, like how was I watching rates? It was like a miraculous thing. Okay, you know, of course, 2020 and 2021, we had such low rates that, you know, 3.3, 3.5 sounds high now, but in the grand scheme of things, it's really not. And that's what you guys need to keep in mind. What's really abnormal is having a rate in the 2s. And we had a beautiful, nice run with it, but it looks like it's over. Okay, now look, could stuff change? Sure. Who the heck saw COVID coming? Who saw Delta coming? Who saw, you know, EX100 variant coming? I don't know what's next, okay? They're talking about a French variant right now, but who saw any of it coming, right? There are still things that could push us down. They could push the economy down. They could push us into a point where the Fed lowers rates, okay? Now, the funny thing about rates going up right now is the Fed hasn't even officially raised them. They've just threatened to. But the key thing is, as a buyer, don't get dismayed. Don't tap out of the market. You know, the only way real estate prices are really going to drop would be if we were like, and this is my opinion, 5% plus, maybe 6%. Because there is such a demand for housing right now, because just as rates are going up and housing prices are going up, so's rent. So there's a huge demand for housing, and the supply is really low, and it's likely to stay like that because the odds of people wanting to sell their house if they refinanced at 2.5, you know, and go into another loan at a higher amount with a higher interest rate, it's really tough to move those people. So I think that our supply is going to remain low, and while the demand still outstrips the supply, housing prices don't go down. So I hope this has been helpful. Please, guys, don't be dismayed, okay? Every $100,000, it is literally a latte and an egg sandwich from Starbucks. I think that's about $13.86. Oh no, I go there too much, can you tell? Anyways, think of it that way instead of thinking it as the world against you. Okay, questions, comments. If you guys want to get on my calendar, there's always a link. I love talking to you guys. You can call me on my cell phone as well. You know, if I'm booked back to back every day, which often I am, someone from my team will call you back. I'll get with you. We always want to help you guys. So please keep that in mind. Thank you for watching.